All right, on today's episode, we interviewed Blake Hutchison, the CEO of Flippa. And man, this definitely, adds a new lens on how to think about businesses, right? I remember Flippa from 2009, and it is a very different company today than it was then. And for those listeners, right, a lot of us typically talk about traditional M&A. I'm going to go buy a plating company. I'm going to go buy a plumbing company, right? Boring businesses that are usually, something you can get your hands on. But on this episode, we actually talked about not only digital businesses, but also how those digital plays can actually help really revolutionize a more traditional business and how you can really buy a traditional business, add digital as a way to complement it, and actually turn it into something unique that can then turn into your lead funnel. So, Casey, what were some of your takeaways?
And I'll tell you one. First off, Blake, I love Australians. He's been there, but one of
there's that air of intelligence that's added just by having an Australian voice,
Australian football, and all that good stuff. But at the end of the day, man, here's one of the things as an entrepreneur that's hunting and looking for businesses. The next stage, now that you have the business and you're in the business, is what does that add on? What makes it more valuable than the other? And I thought about it, but I didn't know there was a platform where I could go research and look around digital assets that could amplify my product, my business.
Yeah, absolutely. And then for those that are looking to buy your first business, right, it's probably a good opportunity to find a business too, right? Buy something that makes sense for you size-wise, that you can go grind your teeth, get some experience, understand how to operationalize or how an operation even functions, and then grow from there. I mean, so again, Flippa's got a lot of diversity, and this does sound like a sales pitch for Flippa, but really it's not. It's really It's just kind of impressive to talk about the different opportunities that are there to open up for entrepreneurs. And so definitely listen into this one. Lots of content.
All right, guys, just take 1 second here real quick. When you're buying a business, ensuring the financial health of the company is critical. And that's where a quality of earnings partner comes in. Quality of earnings gives you confidence in the financials of the company that you're purchasing. It aims to protect your investment and ensure that you're stepping into a profitable business on day one. Patrick of O'Connell Advisory Group is your dynamic quality of earnings partner. He's here to help you buy the right business on your timeline. Patrick's entire practice is focused on business acquisitions. Your niche is his niche. And over the past decade, Patrick's helped more than 200 buyers like yourself successfully purchase and operate enduring, profitable businesses. In fact, Patrick's helped some listeners of this show. So if you're buying, looking for help with the quality of earnings, financial due diligence, network capital, and more, head to o'connelladvisorygroup.com or just click the link in the show notes.
Hey, Blake, welcome to the show.
Thank you so much for having me. It's good to be here.
No, likewise. I'm excited, because I remember Flippa, and I was telling this before the show, right? I mean, I came up that early 2000s internet world, and I remember the day or maybe the week or the month that Flippa first got created. And I was excited to actually kind of have you on the show and learn a little bit more about what's gone on over the past 15 years. And so welcome.
He's even joining from Australia. So, Hey, we're across the world now.
All the way from Australia. It did throw me off whenever I saw the accept for the invite at 6 a.m. And I was like, wait, are we scheduling something that early? But then realized what was going on. Awesome. So
I am on the other side of the world, but hopefully it's formative to everyone.
Absolutely. And so instead of me kind of take your thunder, you want to go ahead and maybe share to the audience a little bit about who you are and what you're doing.
Yes, I'm the CEO of Flippa. I've been running the business for 6 years. I mean, in short, the best way to describe Flippa is it is a marketplace. It's two-sided. We have buyers and investors, and we have entrepreneurs. Those entrepreneurs are looking to exit. The investors and acquirers are looking to buy. It's a marketplace and platform to buy and sell businesses. Probably the unique difference between us and maybe lots of others is we only do digital. So we only do technology-backed businesses.
And so let me ask that, because whenever, in 2009, whenever we kind of first heard of Flippa, it was really geared more towards online websites, right? Hey, I have a website. It's got, 10,000 unique traffic a day, and it's making $500 a day off of Google, right? Like that was kind of the stereotypical business. But today, are you guys kind of the A to Z in the software space, or is there a specific niche that you're looking at?
A to Z. So anything that's built on top of the platform economy is the best way to explain that. So we're really built around and dependent on big tech. So Google's a very, very critical part of our ecosystem. Obviously, AdSense powers most blogs, and we sell and exit lots of blogs. That same technology is used to power advertising for YouTube channels, and you can exit a YouTube channel on Flippa. Of course, the iOS and Android ecosystem, you can exit an app on Flippa. So all tech, so SaaS, e-com, online publishing, call it /blog, digital agencies, as well as, of course, e-commerce, if I didn't mention that, both direct to consumer, and that's typically a Shopify, a BigCommerce, or a WooCommerce, or a marketplace-backed e-commerce business, typically FBA, so fulfilled by Amazon. It really does run the gamut. For a long time there, it really revolved around 4 key categories. So SaaS, apps, online publishing, and e-com, as I alluded to. That's expanded dramatically over the last probably 6 months, where we've seen good demand from investors for other types of digital assets. So I alluded to this, but YouTube channels, Chrome extensions, Slack plugins, anything AI driven, of course. And we think obviously that will be a big category for us into the future. Amazon KDP, so Kindle publishing assets, have become very fast growth for us as a platform. So anything that is digital, anything that is revenue generating, anything that a digital asset investor can imagine taking over, either operating or finding an operator to run for them, where they're looking to generate an ROI off a cash flowing asset.
It's pretty amazing because I'll tell you, I did not know you could monetize like YouTube channels. And I started doing some research about a year ago. I ended up buying, or I bought into one of the passive Amazon stores, right? So you buy in, they were going to manage it. And it was did not work out, right? It was one of those like markup, that was a bad idea. But I learned a lot as I started searching in that space, looking for that, like, how do you generate that income? I ran across YouTube stuff. And I thought that was the coolest thing to see somebody be able to take a channel from nothing and build it up, get it automated, and all these things. Just did not ever know that could generate income. So that's pretty neat.
Yeah, there's
Yeah, it is.
really,
And it's a fast growing category for us. And there's a few reasons for it. I mean, one, there's no such thing as completely passive, as you both would no doubt agree, but it is one of the more passive asset classes or asset types. And the reason being is, one, it's mostly about the back catalog. So it's not necessarily about creating new content and continuing to strive for that next hit. It's really about the back catalog. It's equivalent to buying a share of a back catalog of in the music industry. So that's kind of piece one. Piece two is it's a good complement to an existing business. Doesn't matter what industry you're in. If you can acquire a YouTube channel that has a very, very large following within that industry, it's a great way to capitalize on that community and move them across to your other assets.
That's very true. You could probably advertise on those. You could do your own stuff. Is that kind of the idea?
Yeah, that's exactly how it works. I mean, we've seen people who own, they're tattooists. They own tattoo parlors, for instance. They've bought YouTube channels within the tattooing space. And then they've obviously gone and rebranded that. They've utilized the viewership of that to promote their core services.
yeah. And I think the other thing too, at least, and I don't want to go too far down the video rabbit hole, but ultimately everybody understands video. They know how to make it, right? To start a blog, you do need to be more technical than to start a YouTube channel, right? So it's become a niche, and that's why you have a lot of people that, can fluctuate into that. But I think, that's a good segue to, Blake, I think, to the thing that maybe our listeners really want to hear, right? Which is, and you've been running Flippa for 6 years, right? And really, what have you seen in terms of the influx of appetite, right? Casey and I, we go to a lot of different conferences, and, I like to call it the ETA acquisition entrepreneurial ecosystem is, growing. I mean, I think like wildfire, right? I think right now is really that golden age of really starting to get a lot of more momentum behind it. And what have you seen on your side? Because the thing that people really struggle with is finding a business. Flippa's a great platform to go look through businesses. So who have you seen show up, and what has been kind of that growth?
Yeah, so investor appetite is booming. Obviously, it's a tricky climate out there for obvious reasons, but interest rates high, inflation high. Therefore, investors may be hungry for deal making, but they are a little bit skittish right now. And so that's something we've clearly seen over the last 24 months. But as a general theme, there are hundreds of millions of digital assets. It is the new small business economy. And I find this interesting. Line up 100 people on a street. You say, please draw me a small business. You give them a piece of paper, draw me a small business. They're not going to draw you a digital asset. But the reality is the next generation of small business owners are digital native. And that's the important thing to think about. So these digital assets are the new small businesses. Therefore, the types of businesses that we will be acquiring for the next 50 to 100 years will most likely be digital businesses. And so, therefore, it's logical that there's an M&A platform that enables startups and online business owners to find a pathway to exit. And then it's actually very similar. It's about the metrics that govern those types of businesses. It's about understanding the operational nature of those businesses. It's about understanding what the multiples are, what basis they're traded on, and then what your ROI is on that investment. And so we are seeing a huge appetite among high net worths. But in addition, probably the most surprising thing is that institutional investors are coming down market and entering this subscale asset class very, very fast. And most of that is for the reasons that we've spoken about right now or already today, which is that they see an opportunity to get accretive growth out of their portfolio companies or some other company that they already run through the acquisition of a digital asset. So kind of thematic wise, that's why it's played out the way it has. And I think interestingly enough, if you take 2023 as we end up 2024, but if you think about 2023, that was a record year for business starts in the US. So there were 5.5 million new business applications filed. That's the highest ever recorded in the US. And so the vast majority of those business owners are going to mature as digital natives. And then therefore, again, I'll state it, the next generation of business owners that we end up acquiring will be digital.
No, I completely, I'm bought into that thesis back in 2009. And so it's been fun to see it play out. And I think, you kind of mentioned the institution going down the ladder, right? I mean, it's exactly what we've seen in the lower mid-level markets, right? And I think I do want to shift the conversation to multiples here in a second. But again, the multiples, right, start to compress as you get further down and you can go find better yield. Now, the trade-off is the big institution guys have, $100 million they need to deploy. It's hard to deploy that $500,000 to $1 million at a time. And so, we've seen the fund of funds that are out there trying to just really, how do you scale up in a smaller dollar amount ecosystem? And it's been, I'm not surprised to see it also translated to the digital side, right? It's the same kind of story.
Well, what's kind of shocking to me is so we think about in our acquisitions, especially how we look for a platform, right? We look for a business and then we want to acquire and make it prettier and make it better, right? And ultimately, hold it. Maybe we hold it forever. Maybe somebody taps us on the shoulder, whatever it is, that is our strategy here. So Feras and I were just joking is that we're working right now, closing our second platform. We're expecting it to happen at the end of the month. And then what is our next acquisition? So then we can then focus about going deep. So Blake, in that, one of the things that kind of hit me is, as being the guy that's searching for businesses, that's my job. My job is to search, find, get the guys to the table. I mean, we're a small group over here, but we go out and we're focused constantly about finding business. Now we found a business, take our chrome plating industry. And now you sit back after we've owned it almost a little over 18 months and you sit there and you go, what are the other things we could be doing that maybe the future private equity wants to know, or maybe it makes us just make more money and however it is. So thinking about these ancillary things that we can add digitally to the business is fantastic.
Yeah, so I'm just going to go ahead and just ask the question. In case you're beating around the bush. All right, Blake, I need to buy a plating YouTube channel, right? Something about metal, right? That's my takeaway from this episode. I hadn't really thought of that, but again, the more, and again, we're not going to get a roll-up opportunity through that, but you do start to build brand recognition. Potential clients will come out of that, and it's those kind of complementary things, maybe more so to what we're doing, right? Which is different than clients of yours that is the intrinsic business, is that channel or is that stream. And so it's kind of an interesting thing to
and all of our listeners they're out searching for businesses, they're looking to buy a business, they get the business, and then they think about what are these other things I can do that may not have to be a massive acquisition or going out and starting, well, wow, I never even thought maybe I buy a YouTube channel. Or what if there's a digital service out there that's selling something that it complements what we do. And now we might have a little bit of recurring revenue in our business. So those are some of the things. What are your thoughts around that?
Yeah, so I think that, people buy for different reasons. And obviously we can explore those. So an institutional investor will typically be buying for, accretive growth or inorganic growth of a portfolio company. And it could be that they're looking to roll up assets within a given industry, but it could also be that they're just looking to bolt on a revenue generating digital asset to an existing asset within an existing industry. Mm-hmm. And so we've got a classic example of that where, private equity out of New York owns a chain of apparel retail stores. And they're looking for ways in which to complement that. So they go hunting for e-com businesses, which are in the sporting and athleisure niche. And for them, that's about adding revenue, but it's also about getting new eyeballs, and it's about distributing their existing range of products to a new channel. and to a new community. And so that's a pretty obvious play that we're all familiar with. The other reason that people buy assets is really, as you spoke about before, you've got a metal plating business, you're now going to acquire a YouTube channel. So we all kind of need a pathway to new users. And if you look at, say, Flippa's marketing mix, this is kind of a good way to think about it. We have a very big podcast. We started that from scratch. But in theory, we could buy a podcast that gives us the same access to the same community. You then get a fast start and you fast track your pathway to having a successful podcast through acquisition rather than the blood, sweat, and tears you might have to put in to grow that from scratch. We have a big email newsletter. Couple of 600, 700,000 people on our email newsletter. But I could, in theory, buy a newsletter that is just around my specific topic, that is going to complement my business, give me access to a new community, help me funnel users into my core business. Flippa also has an education arm where we're trying to coach online business owners to get acquisition ready or exit fit. And so we could go and buy a learning business where they already have the skills, they have the technology, they have the capability. So when people think about acquisitions, you need to think about them through the lens of what are you trying to achieve by acquiring that company? Is it incremental revenue? Great. You're acquiring the business revenue. Is it for the eyeballs? Great. Well, you're acquiring the community. Is it because they are skilled at something that you are never going to be skilled at, and acquiring them is a faster pathway than it is to assemble that team? Then that's the reason you would do that. So it's
it's all unique ways, and they're really kind of mini roll-ups, but they're really there to accomplish one specific point, right? Almost like a micro roll-up, right, is maybe the best way. And hadn't really thought through that lens. More of the unique examples you've seen people come and make or something that an acquisition through Flippa, and they're like, man, that really impacted the business, right? Those things I think are the most interesting things, and something that very few people talk about across kind of the rest of the people that we've interviewed.
Yeah, so I think there's a couple of pieces here. The first one is, and you made this point before, multiples are actually lower as you move down market. So the cost to entry for subscale M&A is lower, and that's a good thing. It makes it more accessible to many, but it also makes it a very, very viable pathway to growth. And so I'll just quickly tap into kind of the reasons why that is. One is the risk profile. Smaller businesses typically carry higher risks, therefore the multiples are not as high. Growth potential. Large or venture-backed companies are often valued based on future growth expectations or future earnings, whereas smaller businesses are more likely to not have that same level of growth potential. They're not moonshots. That same inflection point opportunity isn't necessarily there. And scalability and infrastructure, they're often a bit more limited in that regard. And therefore, these are some of the reasons why multiples are a little bit lower, which means the entry points are really good for strategic thought, like the question you've just posed, which is, what are the examples of people doing this successfully to grow their businesses? There are just so many. I told you the quick story offline, which I'll share now because I think it's really, really fun. We had a business in San Francisco. They're called Sporcle. Check it out, Sporcle, sporcle.com. It's the world's largest online trivia business. And so if you go there, you'll see that you can just participate in trivia contests. You can start trivia events with your friends, with your family, etc. Sounds kitschy, but this is actually operating at a severe scale.
Multi-million-dollar business.
They also own, I seriously think it's like a $50 to a $75 million business. They own a number of pubs, so pubs and taverns where people obviously go to participate in trivia events. Now, their whole thing is to, a bit like Google says, we're going to organize the world's information. Their whole thing is to bring a crowd together for trivia, testing, and games. That's their whole shtick. That's their whole strategy. Now, there's only so many ways you can do that. Some people already own a particular niche within that overall theme and strategy. So they came to Flippa and they set a mandate on the platform. That mandate ultimately matched them to a business called Typing Test. Now, you don't have to be a genius to figure out what they do. They test people's typing capability and skills. You can also learn how to type within the Typing Test environment. Now, that business was based in Finland, if I remember correctly, and therefore you've got a San Francisco-based business that is operating at scale. certainly not a subscale business, and they've gone and acquired a subscale asset. But the subscale asset was subscale by revenue. It's not subscale by users. I'm talking tens of millions of users using typing test every month. So the opportunity for Sporkle to capitalize on that audience is going to change their business substantially. Now, admittedly, that business is in transition. It was only acquired about 3 months ago, but word on the street, talking directly to Ali, the founder at Sporkle, he believes it's going to make a very substantial strategic difference to their business. And that's just one example of many, many stories like that.
I just would have never thought of that, right? I mean, that's the thing. It's like you sit there and you brainstorm to make that connection, right? So inside of Flippa, you're saying you have some type of a matching program, right? Explain a little bit more how that works, because obviously he did not sit there and think like this would be a perfect match, right? It was connected. There was probably like, wow, I've never thought of that.
And does the buyer just say, hey, we do this? Does anyone have any cool complementary business ideas and we'll buy your business? Or how does that work?
So kind of, right? You've got the biggest software aggregators in the world, Valsoft, Constellation, these types registering their mandates on the platform, looking to find an easier pathway to deal flow and deal origination. So yes, kind of. The way it technically works is someone like an Ali, who we alluded to before, the owner of Sporkle, he or one of his staff will create a mandate. The more specific that mandate, the smarter the matching is going to be. Now, it's genuine AI. We can do that because we've got 1.6 million registered buyers on the platform globally. We pick up another 20,000 net new buyers each month. We've got 3,500 assets coming to the platform each month. So there's lots of data that we can then use to drive basically what are called graph neural networks. There's 2 graph neural networks, and they're basically plotting the likeness of each asset to each other and the likeness of each buyer to each. And so what they're then doing is looking at intent signals, and it's trying to predict whether a buyer would be interested in a particular asset. Now, sometimes it's very simple. Sometimes it is location category, business model. Sometimes it's more specific than that. It's, I want an asset which is sub 5% monthly churn in the metals industry. And then that's going to be difficult for us. So what we'll then do is watch what other buyers like that buyer look at, and then we will serve up assets that other buyers liked that we think this buyer will therefore probably like too. And so in Ali's case, he's literally waiting for an asset to hit our platform that matches his mandate. We then programmatically will make him aware, hi Ali, new asset has matched, come and check it out now. He will enter the deal room. And that's essentially how the matching works, but it happens at scale. We're doing 425,000 programmatic matches each week.
Yeah, so for those listeners, right, I mean, I think, one of my takeaways is that there's a digital spin for any business, right? It does not necessarily have to be the core of the business. It could be something, like we're talking about, whether it's tattoo parlor, the trivia company, or something else. But for those that are looking to buy an immediate business, right, off of like the business, it's not complementary, but it is the business. Blake, do you want to walk through some sample multiples for people, right? What are you seeing in the multiples, both in terms of what they are relative to different sizes, as well as do you see kind of variance in the different categories as well?
I would imagine SaaS is a little different than YouTube and all that. So very interesting.
That's right. So a bit of a blatant plug. We do make this completely transparent and it's available for all. It's free. So if you go to flippa.com/data insights, this is published there for all to see. It's always up to date. And you can see that by business model. So in 2024, half one, obviously we haven't concluded half two yet. That will get released in early January. But half one multiples were slightly up. We've obviously come off a slightly constrained period for obvious reasons. We've gone through this, but high interest, high inflation, consumer sentiment, investor sentiment's not quite as good as we would like it to be right now. So half one, we did see a slight bump on what it was in 2023, half two. So let's just check out e-commerce. That's pretty familiar to most people. Top decile, 4 to 4.5. We've seen some businesses list as high as 5 and 6, but they get pushed down to around that 4.5 times. And I'm talking top decile. Let's have a look at SaaS. Well, let's look at apps, just to go through the order here. Apps, a little bit higher, actually. We're topping out just in excess of 5 times profit. By the way, revenue multiples are not really a factor in subscale businesses. We're talking profit multiples. Okay. For a SaaS asset, let me just have a look here. Top decile achieved in half one was 6.2. So 6.2 times profit, top decile for SaaS. But the average, importantly, the average for a SaaS business was just sub four times. So that gives people a sense of the multiples right now.
No, and for those listeners that are in the kind of the ETA M&A acquisition space, right? Software is the sexy thing. SaaS is a sexy thing because we think about big multiples. But again, you're in that sub size, and so this is Flippa is a great way to go find a interesting vertical that you really like. You can buy that at a 4x multiple, and if you grow it, right, you can actually pretty quickly get to that 8 to 10x multiple, right? Because the problem is most people think software, they think they have to buy it at a 10x multiple or an 8x multiple, something really high. But again, if you're in that Substack size, you get a much better multiple. Now you have to still do the legwork to build it up. And maybe, Blake, I'll actually add this add-on question. Are most of those single person businesses, or are some of those, a team of 10 people, right? What are the scale of those from the kind of operational side that you've seen?
Just depends. When we're a price agnostic marketplace, so we will look at businesses that are between literally 100,000 and up to 50 million. So clearly a $50 million business is going to have a big team around it, or most likely will have a big team around it. Whereas a business that's trading sub $1 million tends to be a sole trader or a one-man show. And so that's an important consideration, obviously, because the bigger the business, the more complex it is to operate, harder to just stick in to an existing business and expect it to run just the same way it has. So, for a new investor, we would typically, regardless of your capacity to pay, we would typically encourage first-time digital investors to look at clearly sub $1 million opportunities. For those more sophisticated strategic software operators who come with a team or a skill set themselves that can complement the asset, clearly that's a different story, and they're very capable of taking over a team.
And what are you looking at on the YouTube channels? I know those probably trade very different.
Casey really likes those YouTube channels. He's thinking about it. He's back.
No, it's just total selfish questions because I mean, look, I know how hard it is to run a business, and I know how difficult it is. But when you can get a content, right, that YouTube is massive on content, right, and if you can control an audience, you can drive that traffic, right. And so it's a beautiful way, I think, to complement almost any business.
And so they're interesting because the revenue and profit multiples are actually similar because they operate at such high margins. So, clearly there's not a lot of cost that goes into producing, good quality video content these days. Sometimes there is very, very high production quality. I obviously appreciate and respect that. But a lot of YouTube channels have sold, where revenue margin and profit margin are very, very closely tied. So, I mean,
I can't imagine you're getting a real P&L. You're probably just getting a screenshot of the AdSense account and call it a day.
It's exactly right. So you are getting a P&L which exists of a single revenue line and a single cost line. The revenue line is ad revenue and the cost line is production cost. And so they're simple businesses, but come with a good strategic bit of punch. And so, they are selling for quite high, but they're also nascent right now. So they're small. So you might be able to buy a YouTube channel with a couple of 100,000 views a month in a particular industry which matters to you. And you might be able to buy that for sort of 5 times revenue. But 5 times revenue, you're coming off a low base. So you might be talking about it's an asset doing $50,000 in revenue. So you might be able to buy that for $250,000. The key piece is not its revenue potential. The key piece is its audience capability and quality for you and the business that you currently run.
Love it. No, definitely some new things to think about here, kind of as we kind of continue down this journey.
So when you guys take a look at Flippa, just to kind of in your broad picture, you talked about you guys are going to be doing podcasts, you're growing the baseline, you're going out there. To our audience and to our members, what is really that pitch to the M&A group, right? What is that kind of closing remarks that you want to kind of say to those guys in the sense of, obviously you told us a lot of great stuff about Flippa and how to utilize it. But what's your thing to the M&A guys?
Yeah, so number one platform, therefore more deals, more buyers. So if you're an investor, you don't get more deal flow than anywhere else. And if you're an entrepreneur and you're looking to access the world's largest collection of investors and acquirers, there's no real other choice for a platform that can connect you at scale with the efficient deal making that we make available. We're kind of end to end. So it's really interesting. So we are a marketplace and we are a platform, but we have 22 certified M&A advisors on staff, and they are helping business owners find a pathway to exit. They're a conduit to deal making. They'll help you with deal structuring. So between the access and the reach, plus the service layer on top of that, it really is an end-to-end M&A opportunity. I think for those people who are used to traditional M&A, the key message is to school yourself up on digital, because it's not actually the same. But it's kind of like a mini business school opportunity. You go to Flippa, it's all there. You sign some NDAs, you'll get a very good feel for the metrics that matter against a given asset type, call it SaaS. We'll show you the churn rates. We'll show you the LTV. We'll obviously show you the revenue performance. We'll show you the operational detail of the business. We'll connect the data directly to a Stripe or a Shopify and show you the raw information coming and flowing through those platforms. You can then learn about the business and how it operates. It's like a mini business school. So you're interested in just browsing before you buy, get a feel for the assets that are on the marketplace and how they operate. It's kind of quite inspirational to think about what these entrepreneurs achieve before they go into this exit pathway.
Absolutely.
That sounds fantastic.
Window shopping for businesses.
I love it.
Yeah. And then Blake, quick question, last question for you. What's harder for you guys to find? Is it buyers or is it sellers?
Sellers.
Seller side? So you go out there looking for good quality sellers. Awesome. All right. Well, we can go ahead and move into our rocket round where we ask the listeners, the attendees, the same 3 questions. So the first question is, what do you like to do in your free time, Blake? And this is about you, Blake the person, not Blake the CEO of Flippa.
Yes, so I'm part of a WhatsApp group. It's called GBSG, and it's Great Blokes Shit Golfers. And we are a group of golf tragics. And we meet each weekend and we try our very best. We don't post good scores, but it's fun. And so I got into that. I started playing golf when I was 40, so I probably took it up a bit late, I think. And so I'm now mid-40s. I'm not that much better. But yeah, golf is the thing for me.
That is exactly my story. I started about 35, obviously with all the kids, don't have any time. I'm a terrible golfer. I love the game. And so right now I live vicariously through my daughter, but man, like I'm just going to be what I am. I'm not going to be that guy. I'm going to play 4 or 5 times a year. When I do, I'm just going to love playing and be a hack. So yeah, I know the feeling.
I'm still yet to learn golf. And we had the author of M&A for Dummies, Bill Snow, and he basically said it pretty straight. He's like, if you're going to be in the M&A space, you have to be a golfer. So I got to go pick up that sport here. So,
all right, next question. What's your most memorable moment in your business journey?
Oh, look, it's a bit embarrassing. So I've started a few businesses in my time. Basically needed to figure out a pathway to earn some revenue from a particular business I was running. We had a large size community. They were passionate about food. I created a snack box. You could subscribe to this monthly snack box. We published it. We sold 200 in an hour. I had to pull it down because I didn't have the boxes and I didn't have the snacks, but I did need the revenue. So I shut it down, went shopping, bought the 200 boxes, started to fill it with snacks myself, got in the car and started to drive around over a 48-hour period of time, delivering these snacks all across Australia.
Memorable time.
I love it. That's huge.
Awesome.
What a nightmare.
Yeah, dude. I mean, hey, you got to start somewhere, right? And it's not fake it till you make it, but it's have the wherewithal to solve it when you get some traction. That's kind of really what it boils down to. Awesome. And so then last question, what is your favorite tool or resource?
You know what? I'm a big subscriber to Blinkist, which is a really cool app where they summarize books for you in a 15-minute blink, as they call them. And so obviously being a CEO of a venture-backed marketplace, I'm very busy. I'm traveling a lot. I've got a family. And so Blinkist has been a lifesaver just to get through as much learning material as possible. And it's been really great. So check that out.
Awesome. Wow, yeah, Blinkist is good. My problem is I feel like it's ADD because it's even more compressed. So I'll listen to an audiobook or a podcast and then I'll still lose focus. So then Blinkist, I'm like, oh shoot, I just missed the whole 15 minutes. So I gotta go re-listen to it. So,
but it's all highlights.
You know what?
Right?
I sometimes think of it as like a preview to a movie. So if you really like the Blink, then you can read the book. So I did that with the hard thing about hard things. I listened to the Blink and then I was like, yeah, that sounds pretty cool. Now I'll go and get the book.
All right, perfect. We'll put that in the show notes. But well, Blake, pleasure interviewing you. I mean, definitely, I think a wealth of knowledge, and it really changes the perspective for a lot of listeners, right? A lot of our listeners come from that traditional M&A side. They think of digital as its own thing, but not a complementary thing. So I think
you got people right here. They're going to be signing up on Flippa because I it just connected some dots.
I don't know about you. I'm going to go back and see if my account from 2009 or 10 is still there. That's going to be the first thing I'm going to check. All right, perfect.
Blake, pleasure.
Thank you very much.
Thank you so much.
Thank you for listening to the M&A Launchpad Podcast. If you've enjoyed today's podcast and would like to support us, please leave us a rating and a review after you listen. I'm Casey Minshew, and I look forward to talking with you next week.